Welcome to Smart Earnings. In this episode, we will be discussing financial results of Piramal Pharma Limited for the second quarter financial year 2025. Company overview. Piramal Pharma Limited is a significant entity in the pharmaceutical industry, specializing in contract development and manufacturing organization services, complex hospital generics, and consumer healthcare. The company is dedicated to innovation and sustainability, aiming to achieve a revenue target of $2 billion by FY30. Financial performance. Sales 2,241.8 crore rupees for second quarter, financial year 2025, representing a strong 17.3% year-on-year growth and a 14.9% quarter-on-quarter increase from 1,951.1 crore rupees. Operating profit 341.6 crore rupees, reflecting a 28.6% year-over-year increase and a significant 67.0% quarter-on-quarter improvement from 204.5 crore rupees, with an operating profit margin of 15.2%. Net profit 22.6 crore rupees, a remarkable 352.0% year-over-year rise from 5 crore rupees, and quarter-on-quarter from a loss of 88.6 crore rupees. Earnings per share 17 paise, recovering from 4 paise year-over-year. Other income increased to 61.1 crore rupees, a 24.2% year-over-year rise, and a notable 213.3% quarter-on-quarter increase from 19.5 crore rupees. Operating expenses rose to 1,900.1 crore rupees, up 15.5% year-over-year and 8.8% quarter-on-quarter. Management insights. Revenue growth. The company reported robust revenue growth, particularly in its CDMO business, which experienced a 24% year-over-year increase, marking the sixth consecutive quarter of strong performance and margin expansion. This growth is attributed to innovation-related work and on-patent commercial manufacturing. Market outlook. The CDMO sector is poised for growth due to improved biotech funding and supply chain diversification, although elongated decision-making processes remain a challenge. Regulatory changes, such as the Biosecure Act, are also influencing customer inquiries. Strategic investments. An $80 million investment is planned to expand the sterile fill-finish facility in Lexington, which is expected to more than double its capacity by FY27, enhancing the company's position in the injectables market. Consumer healthcare. The India consumer healthcare segment showed strong growth, with power brands contributing significantly to sales. E-commerce sales have surged by 30% year-over-year, accounting for 20% of ICH sales. Growth outlook. The company maintains guidance for early teens growth in revenue and EBITDA for FY25, with expectations of sustained momentum in the second half of the year, particularly in the CDMO and consumer healthcare segments. Management aims for a 25% EBITDA margin and a 1x net debt-to-EBITDA ratio by FY30. Risks and mitigation. Market risks. The company faces challenges from fluctuating market conditions and pricing pressures in the hospital generic segment. Execution risks. Delays in client decision-making could impact order flow, but management remains optimistic about future inquiries and customer visits. Sustainability commitment. The company released its FY 2024 sustainability report, highlighting progress in sustainable operations and alignment with global standards, including the commitment to reduce greenhouse gas emissions in line with science-based targets. Taxation and employee expenses. The effective tax rate is expected to remain high, due to increased profitability in tax-paying jurisdictions, with guidance indicating it may exceed 50% for the year. Employee expenses are anticipated to stabilize around current levels, with minor fluctuations based on incentive provisions. Conclusion. Piramal Pharma Limited is demonstrating strong financial performance, with significant growth across its business segments. The strategic focus on innovation, capacity expansion, and market diversification positions the company favorably for future growth. Investors should closely monitor the execution of strategic initiatives and the evolving market landscape as the company aims to meet its long-term revenue and profitability targets. Management remains cautious, yet optimistic about potential upward revisions to their guidance as the company progresses towards its FY30 objectives. Thank you for watching Smart Earnings. If you found this analysis helpful, don't forget to like, share, and subscribe for more insights into earnings calls and financial results. See you in the next episode.